Who needs to be covered on full coverage for a leased car? When leasing a car, you might wonder who exactly needs to be covered under full coverage insurance. Let's break it down so you can understand the essentials. First and foremost, you, the lessee or driver, must have full coverage insurance. This is because you are responsible for the vehicle during the lease term. If an accident occurs, or if the car suffers damage from theft or weather, this coverage protects you from financial loss. Next, the leasing company, also known as the lessor, must be included in your insurance policy as an additional insured and loss payee. This means that if the car is damaged or totaled, the insurance payout goes directly to the leasing company. They need this protection since they own the vehicle and want to ensure their financial interest is safeguarded. Now, let's talk about other drivers. If you plan to let friends or family drive your leased car regularly, it is a good idea to add them as permissive drivers on your policy. This way, any accidents involving these drivers will also be covered, which can save you from unexpected costs. When it comes to the specific types of coverage required for leased cars, there are a few key components. First, liability coverage is essential. This covers bodily injury and property damage that you may cause to others. Leasing companies often requiring higher liability limits than what your state may mandate. For example, they might ask for $100,000 per person and $300,000 per accident for bodily injury, plus $50,000 for property damage. Then there is comprehensive coverage, which protects against non-collision damage. This includes incidents like theft, vandalism, fire, or damage from natural disasters. Additionally, collision coverage is necessary. This pays for repairs if your car is damaged in an accident, regardless of who is at fault. Another important aspect is gap insurance. Many leasing companies requiring this coverage to protect against the difference between the car's actual cash value and the remaining balance on the lease if the car is totaled. It is important to note that simply carrying state minimum liability insurance is not enough for a leased car. You must meet the leasing company's requirements, which usually means having full coverage with specified limits and deductibles. If you do not maintain the required coverage, the leasing company can force-place insurance. This type of insurance is typically more expensive and offers limited benefits, with premiums added to your lease payments. Lastly, your insurance policy must explicitly name the leasing company as an additional insured party. This ensures they receive any insurance payments related to damage or loss. In summary, full coverage insurance on a leased car must cover you as the driver and the leasing company as the owner. This includes comprehensive, collision, and liability coverages at limits often higher than state minimums.